Is it time to take a look at commodities? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Mish Schneider, Chief Strategist at marketgauge.com. Hi, Mish. Good to see you.
Oh, such a pleasure to be with you, as always. How are you?
I'm doing well. I'm doing well. I think everyone's feeling a little kick in their step today. We saw a big rally in stocks, one of the really strongest days so far this year, and bond yields pulled back after we had another market-friendly inflation reading and some strong earnings coming from some of the big banks. We're just getting into earnings season. What did you make of the action today? I mean, it looked like we were closing on the highs with some momentum up last time I checked.
Yeah, I haven't checked in the last 15 minutes myself, but well, first of all, there's a couple of things. Number one is a couple of days ago, I guess Monday, when we had that down day and it closed and reversed, we sort of knew at that point there was a good chance that the January low, at least in terms of the indices and a lot of the sectors, was in. So that really led us to believe that we would see a rally on Tuesday. And then, of course, we had the PPI first, and that allowed some of the rally to continue. But it wasn't all that impressive, obviously, until today. So you had like sort of the double whammy, or not whammy, opposite of whammy, the double, I don't know.
Wowza.
Four-leaf clover, right? You had the CPI, although deceptive, we'll talk about that, but that was perceived as, yes, we're on our way to 2%. And then, of course, you had the bank earnings, which particularly, I think it was, Goldman Sachs, like double what the anticipation was.
Yeah, big numbers.
Big numbers. And that's not surprising. I mean, everything was in line in 2024 for the banks to do well. And of course, they're all based on this soft landing narrative too, and keeping inflation in check, which of course is part of the soft landing. So to me, it's always what happened is interesting, but it's what's going to happen that intrigues me the most. And of course, that's why we talk.
Yeah. So, okay. So talk to me about, I tweeted out earlier for those of you who saw that you were talking about, you had mentioned to me that the January trend trade reset is coming up. And it was coinciding with a lot of things. We just talked about earnings, inflation, the Trump inauguration, which a lot of people are, looking at and trying to handicap and wondering what's going to change. So why is this important? How are you thinking about this?
Well, first of all, this is something that isn't new to us. We've been doing this for the 20 years of our history. We use a January and July calendar range reset. And there's a lot of statistics that go with that. I won't go into it, but it happens to be particularly powerful the January of a new administration. Here we are, right? And so essentially, as I mentioned before, that Monday low seemed to be a good January low. So let's say that becomes the range low, the 6-month calendar range low. And in some instruments, we may have already put in a January high, but in others we may not. So if we're looking, let's say, at my favorite granddaddy, which would be the small caps, really 227 and change was January 6th high. And today it got up there and came off a little bit. So it actually amazingly resets tomorrow. It's the first 10 trading days, and we lost a couple of days because we had the Jimmy Carter funeral and then another holiday, and now we're going to have obviously a holiday on Monday. So I'm saying really essentially tomorrow, Thursday, then we have Friday, then we have Monday off. So somewhere between Friday and Tuesday, we will have a much clearer idea of what breaks out. And we could actually call it not just the January calendar trade, but we could also call it the Trump trade, if you will, because a lot of what will break out will be, whether it's right or not, since we don't know, based on the optimism of what a Trump administration is going to do for the markets. Things that break down, obviously the opposite, and things that chop in the middle, obviously those are going to be the things that to avoid. So today's action was very interesting because nothing has gone past, I shouldn't say nothing, but in the 4 indices, they did not go past their January high. And actually Q's managed to clear the 50 today. SPY kind of eked it, but the Dow and the small caps did not. And all of the major sectors did not clear the 50, except obviously the banking sector, if you're looking at XLF. So we're still in that range. It's going to be really sweet, probably sweeter than ever, because we'll have a much better idea.
It's really important. So there is So let's talk about you came out with your 2025 outlook. There's so much stuff in there. I encourage everyone, if you haven't seen it yet, go to Mish's site and try to get your hands on it, because it's really, really deep with a lot of analysis and charts and everything Mish is so good at. But so I'm gonna come back to stocks in a moment, because there's a lot in there on that. I want to ask you about yields and how you're thinking about the Treasury market here, because not only has this been driving, this is why we were paying attention to inflation today, because yields have been going up in anticipation or concern over that. But I have to say, for all of the guests coming on that I've been talking to, there's a lot of disagreement about this. And I'm hearing really different forecasts, but the one thing everyone agrees on is there's a lot of concern in this area. How are you thinking about treasuries here? Yields did back off a little bit today on the back-to-back CPI and PPI numbers, but how are you thinking about treasuries?
Well, first of all, we can go back to what we just talked about. So if we just look at the January trend trade, actually a new low was made in the TLTs. If we're looking at TLTs as a measure of the 30-year, which is my favorite, we made a new low, January low yesterday. So we have a bottom to gauge ourselves on.
You're talking about price, right?
Price-wise, yeah, because I'm all about price this year. I know you and I talked about this. I'm not sure if I actually said this since we've been on the air, but this is all this year. I want to repeat what you told me that Darius Dale said, which is dispersion of probability is, I think, one of the most brilliant things I've heard so far, because essentially that's yields right in a nutshell. I mean, we have people that I've listened to that are brilliant who think that yields are definitely going to continue to rise and the Fed's going to have to raise because of inflation. Then we have other people, and myself included, that think at some point the economy will snap because of some of the Trump policies, maybe. And I don't want to sound anti-Trump, but, when you're talking tariffs and some of the other things, more government agencies, not less. He's supposed to be reducing government, not increasing it, but now he's talking about not the internal, the external revenue service. So, these are the kinds of things that I'm not making a comment on his policy. What I'm saying is that that's where the dispersion comes in. And so to me, I'm going to find so comforting is to actually, and I'm the queen of narratives like you. I mean, this is why I go on media all the time. People want to know, what do you think? What do you think? If you had to put a gun to my head, I'd say stagflation, because I believe that maybe the yields will come down. I believe that they could come down to about 3.7% at some point. Why would that happen? Because in March, maybe the Fed has to pivot. That's kind of what my prediction is, but it's meaningless, like everybody's prediction, unless we see the long bonds now clear the January high, in which case I would get pretty excited about the fact that that will help the market initially, certainly in certain sectors, and B, it will also continue to goose inflation, which today we saw a lot of commodities go up along with the lower inflation numbers. So, that's kind of a little bit of a head scratcher as well.
Yeah. So let me just step back and break that up and ask just for clarification on a couple of things. So when you say price is everything, so we have a sort of wide range of forecasts, a lot of open space about what could happen, right? A lot of opinions, a lot of probable outcomes, hard to see. I think Rosie called it the bog of uncertainty that we're in. So it's very hard to see the future. Does that mean that you're going to be less focused on sort of like a trend and a story, let's say tech and, tech's eating the world, and you're just going to look for confirmation all the time in the charts? Is this more of a chart driven market right now?
Well, the short answer is yes. I mean, I like to say that if this might be a good year to pretend that you're living under a rock and that the only thing you see is price and charts. You don't hear anything else. We know that this is a very headline-oriented administration coming in. I mean, I'm on X. I don't know how much you're on it, but every other post is from Elon Musk. Every other post that I see, even though I don't technically follow him. And of course, even though Trump has been more Truth Social, anything he says winds up getting reposted there. So we're going to see all these headlines. This is a good way to live under a rock, because to me, we know a couple of things we do know from his past administration. One is sometimes he says, and this is, again, not to be political, this is just fact, he says very outrageous things, and I believe some of it is just things that he just says, and some of it is a negotiating point. Like if you start at this really outrageous point, then there's a negotiation that comes somewhere. And maybe today was a perfect example with the potential ceasefire that we're hearing about with Israel and Hamas. I mean, he came out and said a week ago, we're going to massive destruction if they don't release the hostages. And now they're releasing the hostages. You see what I mean?
Yeah. I just want to interrupt you for 1 second. I want to clarify something. So we have some comments in the chat. We are doing a market show. We're not doing a politics show. Mish is talking about trying to get a handle on risk and probability in the market. She's not making a comment about how she feels about the Trump administration, nor was Darius, nor is anyone who comes on this show. They are trying to make sure that they look at every probability. So that is going to increasingly this year include politics. So everybody simmer down just a little bit. You are welcome to have your view on politics. I am not doing a political show. If it veers into that, we'll self-correct. But this is what market analysts have to do. They have to look at probabilities. They have to assign risk to it, and they have to figure out how it could impact the price action. That's what they have to do. So they're going to have to say, if he gets it through, it's going to be this. If he doesn't get it through, it's going to be that. It's not saying that's going to happen. So I just want to insert that so we kind of just can all take a step back.
And this
on
is,
that.
by the way, Maggie, this is a classic example of how emotional people are. I am not saying anything negative or positive. I'm just merely stating that it will be an impact to the market, which is why I kind of like the go back to the charts and live under the rock rule, so that you can have a certain level of blindness and become more dispassionate about whatever happens.
Right.
And so it's the anti-political. I do not want to trade off my politics at all. I don't even have politics really in my mind. I'm not that interested in that. All I'm interested in is how to make money. I mean, that's it. How to make money and how to protect what you already have in the market, and how to have risk parameters set. Right. And what's going to be the next hot trend.
And I will just say, before we move on to commodities, because we're getting some questions, I will just say that this is happening every time we talk about yields, because the Treasury market seems like it's going to be the one most impacted by some of the policies that may or may not come out of the new administration, just like they were for the last 3 years on a roller coaster ride based on the fiscal spending and things that came out of the last administration. So that's where this always seems to come up, this pocket. So we'll all maybe just file that away. So
okay. And also let's talk about Powell for a second, because Powell is in a situation where he's very clearly stated that he doesn't see a lot of reason for lowering rates. He's still concerned about inflation. So he's kind of already made his foundational statement going into this year. And so does that mean if we say, well, if he does this or if he does that, or what he says or what he doesn't say, means that we're anti-Powell? No, we're just trying to be realistic about what we can anticipate.
Somebody just had the greatest comment on here. I forget where it is, but someone just said, well, one thing we know is that Trump will make vol great again. And I think that Jem Carson has that hat on. And it does feel like we're going to go into a more volatile situation. So let's talk about commodities, because we kicked off the show asking, are they going to have a breakout? Is it time to start looking at commodities again? How are you feeling about that sector? If I'm not mistaken, it is one of your preferred sectors going into 2025, right?
Well, yeah, not every single commodity, but yes, there's a few areas that I've been really, really interested in coming to this year. And we'll talk about that. Oil wasn't something I was necessarily interested in trading, although I'm kind of sorry now, because I was somewhat contrarian at $68 a barrel in WTI, and now it's $80 a barrel or close to it, which I'm surprised at in essence. But here's a perfect example where you forget your politics, right? Because whether we're going to go and open up every reserve and drill and everything, and that's going to drive the oil prices down, it may not. And that's where the charts become so important, because if it breaks out over 80, we're definitely talking more inflation. Gold traded back over 2,700. That has been solid as a rock for the last couple of years, partly as a risk, a flight to safety, partly as an inflationary tool. Silver, which is still has been compared to gold underperforming, is starting to show a little bit of signs of starting to outperform a little bit. That's inflationary. Copper, which a lot of people left for dead. Well, everybody was so bullish last year and then it did nothing but fall, has making a little bit of a comeback here. Corn, which I was like maybe the first person to talk about corn, just went up a lot. It went from a breakout, which I was saying at 460, it's trading up at around 475, 480 right now. So all of this to me tells me that in the face of all these softer numbers, which by the way, the CPI, by the way, the cyclical prices were up, only the services were slightly down. And in the ISM, the prices paid in the Empire ISM, which was a dismal number, was at an 8-month high, and the outlook for the next 6 months is at a 2-year high. And the inflation survey people are definitely feeling inflation still. So that's why I'm looking at these commodities. We talked about a super cycle. It didn't happen in 2024, but I never said it would. I said 2025, 2026. I kind of put it on the shelf because of price, thinking, okay, maybe I'm wrong. But now I'm starting to see that might emerge again. And then I'm starting to hear some other like-minded people talking about this and saying stagflation is still a possibility. So that's why those are the commodities right now that I'm mainly interested in. And then, of course, now we've got the fires. What is going to be the collateral damage to that in terms of government spending and resources and rebuilding? And I don't necessarily feel that that's the last weather disaster we're going to see in 2025 either.
Yeah. No, I know there's a lot of questions and concerns coming up at the insurance industry as well. So one of the things you said in your 2025 outlook was that that the stock market may fluctuate, but that significant opportunities will arise for those focused on individual stock picks, especially if we get corporate tax cuts. What are some of the sectors that you're looking at? Because we kept looking for a rotation or a broadening out, and it seems like it materialized for small periods, but then it kind of got concentrated right back into the mega cap tech. What sectors are you interested in as you sort of think this through into 2025? What's on your radar?
Okay, well, first of all, besides commodities and silver being probably one of the top of my list right here, in the mega cap stock area, let's get this straight. A lot of people think the rotation will be out of that and into the value, and it's a stock pickers market. I've heard all of that. And, it's always been a stock pickers market. It was just really easy for 2 years because all you had to do was buy the Mag 7 stocks and kind of ignore everything else. So I think a better and more sane interpretation of that is they may not perform as high, and they could. I'm not dismissing it, but right now, today, they certainly look like they would. But everything broadened out. So what I'm looking at is what could actually go up more in this year if we're truly going to see the broadening out. A couple of the areas I've talked about over and over, I really am extremely interested in what the trickle effect is of the diet drugs, for example. In fact, I've been watching Novo Nordisk very carefully because the thing just got tanked and now hit a major support level. Didn't actually have a confirmed reversal today for those people who read my daily. So it's not like I'm running to buy it tomorrow, but I'm watching. But yet other stocks like ELF and Ulta and even Nu Skin starting to look kind of interesting now. Some of the other ETFs that are more related to the diet drugs, HIMS, I know a lot of people have that on their list. Things that have to do with beauty, skincare, makeup, exercise, supplements, diet. I think the consumer is shifting to that. And we have retail sales tomorrow, by the way. That also will be kind of an interesting.
So away from apparel, and I don't want to call it wellness, but more about sort of
more about me, from we to me, I think is the easiest way, which I kind of stole from Muhammad Ali, by the way. So that's what I think. I think consumers, the obesity rate is really high. I don't think RFK Jr. would necessarily be able to stop the train of how many people are taking this drug. I don't think it would be met well if all of a sudden he's decided to ban them. I just don't see that's happening. And it doesn't work like that anyway. The red dye story that came out today, they have until 2027 for food and 2028 for medicine to get rid of the red dye. So,
So
it happens over time. People think things happen right away.
What about industrials? How, like, a lot of people are saying, there's this focus on rejuvenating the manufacturing sector in the U.S. We hear a lot about that, but I haven't seen that. That's, I'm sure, again, a longer, there's a longer arc on that. But do you expect that to show up in the stocks? It's sort of, if it has, it hasn't been high profile.
Right. Well, that's because people are worried about tariffs. So you've got two things going on here right now. You have on one level trade war tariffs, and on the other, it's made in America, and let's incentivize small businesses and deregulation and lowering corporate taxes and get it stimulated. And that's exactly what I'm talking about. This is where it's best to put the blinders on and just watch. So in terms of the industrials, yeah, I'm definitely excited about the idea of made in America could become a thing or more of a thing. Reshoring is not new. But we still need to look. So I'm looking at things like automation. Like I really have been watching Symantec for a long time now. It's a crazy stock, by the way, but it looks pretty damn good in terms of a base. So that would be a typical value play stock that would take advantage. Chemours, which, believe it or not, makes Teflon, but also for chips. So things that make things that can really, that's kind of where I'm going. I like Big Blue, IBM. It hasn't done anything really much yet, but I think it has potential. Obviously, the defense stocks are in there as well. So that's definitely in there. And also EVs. People probably think I'm kind of nuts to keep talking about this, but I do believe, again, there's the rhetoric of what's going to happen versus what I believe will happen, which I believe that actually EVs, especially Rivian, obviously Tesla had an amazing day today. The cars that aren't Chinese cars, especially Rivian, which is made in America, Ford, that these companies might actually do a lot better this year. I think Rivian is got tremendous potential upside and a very limited downside here. So that's kind of what I'm looking at. Again, here's another made in America kind of thing, Stratasys. Now, I know people go, oh, Mish, 3D printing, let it go. But Stratasys made a deal with NASCAR. NASCAR is even bigger than the NFL, right? And actually, the season starts this week, I believe. They made a deal that all of their 3D printed parts for their racing cars will be made by Stratasys. That's huge. And yet the stock is just sitting there at around $9 a share. Had a couple of blips with some volatility, but this long major base. So I go back to my beginning statement. All these things I'm mentioning, just watch that January trend trade, and then you make the decision. And if they don't break out and the mega caps do, well, then there you go. More of the same.
How much is the dollar going to factor into this? Because we've seen that strength. A lot of people think that we're going to see a weaker dollar for 2025.
Well, again, this is what people think opposed to what they're seeing on the chart. So I knew you were going to ask, so I made sure I looked really hard into the chart today. And I think the best indication that I saw is right now it's obviously in a strong uptrend. The momentum is to the upside, even though it came off a little bit today. It wasn't anything all that major as far as I'm concerned. On a monthly basis, January 31st, going into February 1st, if the dollar closes under 108.50, it will break sort of and reverse from a key momentum play in Bollinger Band. Those of you who don't know what that is, it doesn't matter, on the monthly chart, which tells me that the uptrend is over. How far it goes down, we don't know. But until then, I'm not really willing to make a call because there are reasons why things could continue to go up in the dollar, especially if there's a more tariff trade war policy. And there are reasons why it could go down as well. So we don't know. We don't know. Look at the charts. Here we go. I'm going to say this over and over.
Yeah, no, it feels like we're in that environment. Ralph's asking, what's Mish's view on, hi, everyone in the chat. I know I was sort of telling everyone to simmer down before, but it's good to see you all there. What's Mish's view on Bitcoin and Ethereum?
Great question. Yeah, I kind of got my head handed to me last week when I talked about Ripple and XRP. People say it's a shit coin, but actually there has been so many headlines about it recently.
Wait, are we talking Bitcoin and Ethereum?
We are in a moment. I just want
Okay.
to start with XRP because it's the most controversial. Because really, basically what's happening right now is that some of these altcoins, and I'm looking at Solana, I'm looking at Chainlink, those in particular, those three in particular, I think have a great potential this year. But, you got to look at the granddaddy, which of course is Bitcoin. So Bitcoin fell right down, just like all the indices did, right down to support, right down to that 50-day moving average at around 89,000. It was like almost technically perfect. Now it's back at 100. I still think that Bitcoin is going to go up. I think it could be a little bit volatile because that's the nature of the beast. But I projected, I think at the end of the first quarter, 130 to 150 in my Outlook 2025. So I'm going to go with that for now. But don't forget about the altcoins, because even though they're not sexy, and Ethereum, I mean, that 3,000 level has been up and down, up and down. I have probably less of a view on that, but that's how I'm looking at Bitcoin, not only in of itself, but as a barometer for some of these alt currencies that could have percentage-wise much bigger gains, like Ripple, that has just gone up about 30% in over a week.
Yeah. And I think Adam pointing out it's up 11% today. So it's so interesting, Mission, when you're looking at time frame here. So you're going to get that January read. But if the charts are really going to dictate in the price action, does everybody need to have a little bit of a shorter term view here? Do you need to sort of check the price action more frequently if we have to rely on that more? What's a good practice? I mean, obviously you do it all the time and have them tattooed on your brain, but for the rest of us mere mortals, how plugged in should we be?
That's such a great question, Maggie, because what has kept me from getting bearish on this recent correction was the weekly charts, right? So the weekly charts you can also use for that January calendar range as well. Regardless of what you use, whether it's a short term or a longer term, we don't want to see these January lows break down in any instrument that you might own, and certainly in the overall market. So that tells me that right now we have this incredible advantage to really be able to look short term as a launching pad, at least for the next several months. So to answer your question, I don't care whether you look at the daily or the weekly or the monthly right now. Look at that January low, because we just made it this week, which means it's so hot off the press and so fresh that it's really going to be critical to hold. If it doesn't, it's also a great risk point if it does. Same thing with the January highs. We're not talking, some things have huge ranges, of course, but if we're looking just at the indices, the ranges aren't that big compared to what they can do. So here's the thing, the caveat about the ranges. Sometimes they break out and they fail, right? So I guess what I would say is if you had to have a number in your head besides the January low and wherever you get in because of a breakout, also know where you got in, because know that if that's the January high and it fails, maybe you need to be a little bit more aggressive in terms of protecting your money. And isn't that going to be the theme this year that many people are saying? That's what I'm saying. Forget the headlines. I'm just going to watch that trade. If my instruments, and by the way, I didn't get out of anything I came in with. I mean, that's different. I'm talking about new stuff. Anything that I buy now on that range, if it breaks back down under, I'll take the small loss and I'll relook. If that's a word.
Yeah.
So that's how I'm suggesting. So you don't have to become experts even in charts. Just think about the 10-day range sets tomorrow, whatever the high is, and anything you're interested in, you already know what the low is, and play that range in that. If it goes above, but if it comes back in, fair warning.
Yeah, no, that's really, really good advice. I wanted to ask you about AI, because this is another point that I have there's so many opinions about it, and I'll talk to one person and they'll be really believing in this revolutionary story. And then someone else is very skeptical and really fearing a pullback in that area. So price wise, looking at it through your price lens, how are you thinking about that and playing that?
Well, first of all, I mean, obviously, no one can deny that AI is just going to ever improve and increase and innovate. Yesterday, I was reading a story about The future of firefighting is using AI robots. And we know China's already using drones in firefighting. So, I mean, come on. But in terms of actual investment, my little sort of slogan has been, we're going to go from the hardware side to the software side. So that's why I've been interested in other companies. Well, obviously Google looks great on the chart. I think it may even made a new all-time high today because they're more involved with the software side of the AI, but so is Salesforce, so is Snowflake. Snowflake chart looks good. CRM, Salesforce is still in there, you know. So I'm looking at, even in the retail space, Ulta is using AI. You know, Mag, you can go on Ulta site. I don't know if it's ready yet. Have your own face and try different hairstyles, different makeup, so it's going to infiltrate more and more. That's why I'm more interested right now in the software side, because I think people really took advantage last year of the NVIDIA, certainly, for sure. And not that I think NVIDIA is going to go down very much, but I'm not necessarily sure right now that that's where I would be putting my more money. Let's put it that way.
Yeah. Yeah. It's certainly going to be interesting. Mish, so great to kick off the month with you and get an idea of what you're thinking about. I actually was told by someone else that it's the year of the wooden snake. I know you follow those things.
Yes,
And there's
the yin wood snake. So two things I want to say before we go. One is the yin wood snake. Last time we had it was 1965. Interesting year, right? Lyndon Johnson was president. Vietnam was cooking. And we were basically fighting out of sort of a recession, but the market was going up. It wound up marginally that year. The number 5 is another thing. If you look at Larry Williams' work, and also Jeff Hirsch's dad wrote a whole thing about the number 5, that it always ends as an up year, but 65 was only a marginally up year. And the final thing is, I want to say again, because I don't want people to be upset or think that I'm being political. I'm not. What I'm just saying is the fact that you're so upset that I even mention it shows how politically charged some of you might be. And that's not going to serve you in making money. It's not going to serve me, and it's not going to serve you. So put those blinders on and just look at price. And you know that half the country voted one way, the other half of the country voted the other way, which means we're divided, and we don't want to be divided when it comes to making money. We want to be one. That's what I'm here for.
Yeah, I'd also say that I'm heads up programming note on this, but I had a very big picture macro conversation with Russell Clark. I know many of you will be aware of him. If you're not, you should be. Many years in the hedge fund business, got out of it for some years, and is doing a Substack, is with me on Substack. And we had a really fascinating conversation. And some of all these issues that we're talking about are not limited to the US, and it's not about the Trump administration. There's a global trend going on. So if you go back and listen to my conversation with Dee Smith, with Juliette de Klerk, a lot of these people are thinking about this as a global trend and trying to thread out what it means, but there's a feeling like we're in a period of great change, and that is going to affect investment. So to that point, Mish, like we really have to sort of sit and try to listen to everyone as people work out what this is, and no one has the answer, but there's some really interesting thoughts. And Russell,
by the way, 31% of the liquidity in the U.S. markets comes from global markets.
Yes, so we're all interconnected. So it's going to be really, really interesting, potentially really fraught. And Russell had some really interesting things to say that you're going to want to check out. That's going to drop on Sunday, if I'm not mistaken, but we'll keep you posted over email. Sign up for the email in the description. You can find Mish's work there. And of course, subscribe if you haven't. We appreciate you all. Thanks in the chat. Really great conversation. And we will be back with you. I am with, who do I have? Jem Carson, who's going to fill us in on the flows and what we need to know in options and derivatives. By the way, I think that we'll talk about this Friday, but he nailed the top in NVIDIA, like to the day, as well as some other things. So it'll be interesting to catch up with what he's thinking about going into this. Thanks, everybody. Thanks, Mish. We'll see you again soon. Appreciate you.
Thanks, Maggie.
Have a good one, everyone. Take care and good luck out there.